The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, our hearts and thoughts certainly go out to all the folks in Las Vegas. Boy, terrible thing to happen, but unfortunately, that person had an agenda that just scares everyone. What are you going to do? Okay, folks, let's take in fact, there was let's don't go into that. Let's get into the market, try to clear our mind of the bad stuff that's going on to the world and just see what's going on. We posted the chart of the DAX in this morning. As you can see, from the 5-minute chart, it opened right on its high and then started to sell off a bit. But as you see from the longer-term daily chart, it is either approaching a daily top going back several months, a double top, or it's probably getting ready to break out. We have one market, we'll get to gold in just a second because it continues to look lower to us, but we'll look here at the Treasury bonds here this morning because they have a very interesting pattern. We've had a lot of activity in bonds last night, and you'll see it right here when I post it up here. We went down a full handle, one full point, which is $1,000. We made a double bottom from where we made on Friday, and then we immediately reversed and moved $1,000 up. Folks, this is not unusual type activity in the bonds. The main thing is that what we want to do is we want to look at this Treasury bond as it rallies more today to get up to the 153.08 level, because that will be a 382 retracement, very similar to what we had during the 18th to the 20th of December. In other words, it rallied, a good a point and a half, and then it turned right down. So the really key figure to watch in the bonds today, from a technical standpoint, and looking at some of these fib numbers, is to watch this 153.08 level. Now, if we get above this, we get above 153.20, then I will assume that's probably it could have been a major bottom, but frankly, it doesn't have any of the characteristics of a major bottom that I can see. It's had a good rally over the last hour or two, but that's happened several times before. The overall picture in the bonds still certainly looks a lot lower on the 4-hour chart, and of course on the dailies and weeklies it looks even more ominous. So that's one of the main ones that I'm keeping an eye on today, because I think it's relatively important. Now, another one that is very important, of course, is that gold market. Folks, to me, the gold market is wanting to go lower. That's about the only thing that I can see in the market that would make me think that it's going to go higher. I haven't seen it yet, so until it changes, we'll have to wait and see. We had a very small, let's put this up here so you folks can take a look at it. Now, we'll look at it here on a 4-hour chart. The 4-hour chart gives you, almost 2 months, so you get a really good idea of what's going on. And here we had that 382 retracement, and went right up to that 1318, and now we've broken down. Last night, we had made a 78% retracement at that 1279 level. Then we broke that and we went all the way down to 1272, I believe. And this is a beautiful ABCD pattern that looks like it wants to go, to 1245. And 1245 will be very close to the 78% retracement of the low from way back, on August the 7th was when we had the lunar eclipse. So let's try that again. That was July. That was not August. That was July the 7th, and there was not a lunar eclipse there. It was July. And but that's what it looks like, that we're going to get down to that level. So, there's going to be some bounces. I mean, it's nothing to see a, 11 or 17 or even a $30 rally here in gold from this level. But frankly, it certainly has a lot of things that's saying that it certainly wants to keep going to the downside. If we take a look at the gold silver index, you're going to see pretty much the same thing. When you look at this, you're going to see a market that is, hold on one second. It was actually setting on the exact 61% retracement. Actually, we closed a penny or two below it. But here again, you'll see that small rally that we had, and that also tells us that we most probably could be heading down to the 79 dollar level in the XAU. But that's what it looks like. Silver is even more ominous because it didn't have the strength on the upside that we saw in the gold market. So that market appears to be heading lower. So I would be watching for places to sell it, and that would be the thing to watch. Usually in bear markets, gold will usually rally somewhere between $11 and $20, and that's watch for the ratios to come in at that time, and that's the main thing that you want to be looking at as we watch this. Now we have Arch Crawford coming on at the break, hopefully at the big break. We're going to try it again, see if our telephone service here in Tucson, Arizona is going to be working, and then we'll get Arch on at the half hour to talk to him about some of the astro things that we want to go to. Now, I want to bring back something that I talked about Friday that I really believe very, very strongly in, and that is the fact of where we're standing here in the open interest here in the stock index futures. Let me bring this up here to let you take a look at it. This is last week's action in the S&P 500, folks. Give me 1 second to get this in here, and you'll be able to see it if I can get the little mouse to work. This is on Monday. You see they had a change of +4, and then look at the rest of the week, folks. We lost 7,000, 16,000, 31,000, and 28,000 in the preceding 4 days, and that's not a good sign, because as the market goes up and it doesn't make new highs, that means that it is weakening. I'll put this up one more time because I really believe that it's that important, and you'll see here as I've marked it there with a green band. When you have a prices rising and open interest falling, the market is weakening. And the reasoning for that is the strong hands are leaving the market. The weak hands are leaving the market. The short covering, then that's what it is. With stocks, you don't have that. In stocks, you have stocks that are, available for trading. The stocks that, not, what do they call it? Corporate stocks, stuff they keep in their treasury, but the stocks that are listed that are tradable, and that's a given thing. So you have a buyer and seller on that, but it's with the futures it's different because you have to have a contract. In other words, for every buyer there has to be a seller. If you don't have a buyer, you're not going to have a seller because the seller's not going to have anybody to sell to. So that's the big difference. You got to remember that open interest is important when you're looking at futures, and these futures are new. We didn't start these futures until April the 16th of 1982. So they're only 35 years old. So they're relatively new to the futures markets. And now we have futures on futures, and we have options on futures. I mean, it's it's a little bit of everything on this thing. So it's got a lot of speculative stuff. We're going to come back. We're going to talk a little bit about the stock market, and then we'll have Arch Crawford as our guest at the break.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted a fear and greed index that some folks watch, and as you can see here, we are sitting right at the extreme greed level at 85. You know, last week we were at 79. The previous week we were at 71. But look where we were just a month ago. We were in the fear index at 34 and 38. And now we're at this level that we've not seen before. This is about as high as it ever gets. And so I don't know if this is going to be an indication there might be a one-day sell-off in stocks. Who knows? But anyway, we're up at this level that looks very, very tenuous at best. So just make sure you protect your positions on either the long or the shorts. That's for sure. You want to be able to stay and play in the game no matter what. Let's take a look here at the Bradley Index. We'll just look at it here one more time. This is the inverted model. This is the one that I have to point something out that is, if you'll notice here on September the 8th, where we had that bottom down there, where it should have a little bottom and we were making a top. I really, because of that butterfly pattern that was there, I really believe that that was going to be the high. And as you can see, with the Dow Jones, we've come down. We're going to take that high out this morning, and we're overlooking this Bradley date. It's actually the Bradley date could be stretched out all the way to the 4th. That's when we have actually the 5th is the full moon, and that's it's a very famous full moon in China. It's known as the harvest moon, and I believe they take a few days off for this. It's when the people exchange the moon cakes, which is basically angel food cake, and it's really quite delicious. But as you can see, we're right over this big Bradley date right now, so whether we see anything or not, we'll have to wait and see. What you have to remember here, look what happened in July, folks. We had a big Bradley date there, and of course it inverted. It was high, and all it did was kept going higher. So these things do fail. And, the patterns are certainly knocking themselves out one at a time. But it's going to be interesting to watch because this is a big one. And not only that, but this is the biggest one for the next, the highest level that we have anyway for the next year. You'll notice we come down into November. We rally up a little bit into December, and then we come down all the way through next year, is what the Bradley model is saying on a longer term basis. So this may or may not be a major top. You know, we've hit new highs in almost everything with the exception of the one that had been the leader, and that's the Nasdaq. The Nasdaq has still, you know, not made new highs, but boy, believe me, it's within one very short cab ride of a major high, and that's really what we're looking at as of Friday. And we're a little higher tonight, but as of Friday, you can see here that we made the 78% level, but we got up to the 50. I think we got up to 6,000 last night, so we went about 20 points higher. But we've been in the same range here, you know, ever since July 24th. You know, that's the main thing that you have to keep in mind. The rest of these markets have gone higher, but not this one. So, and remember, it's not that many stocks that are making it do this. With the Nasdaq, you know, that Nasdaq 100, you got about 25 stocks. You got about 100 stocks in the S&P 500. You got 30 of the Dow stocks that are really the high price ones because that's price weighted. So, and then you've got the Russell, but the Russell has got, you know, those are 2,000, and it's made new highs. So, you know, this is not a sign that the market wants to turn down, even though that it has all the technical things that are supposed to be there, the patterns and, you know, the VIX index and the fear and greed index and all the other things, but it's not turning down as of yet. In my personal opinion, if it doesn't turn down this week, folks, this is not saying very much, but, you know, it's going to go probably some places that no one ever thinks it's going to go to. So you have to remember that that's the case. You remember back in 2000, we had the situation known as the dot-com bubble, which I don't think we'll ever see that in my lifetime again, unless this is it. But, you know, that's where stocks were jumping 20, 30, 40% a day, and some doubling and tripling in a day. And they did that for well over a year and a half, and they finally topped in March of 2000 after the Dow had topped in January of 2000. So who's to say that these things can't go, you know, a great deal higher, because they certainly could without any trouble at all. Now, we talked about the Treasury bonds, where they stand. We'll look at those on a little bit longer term basis to give you an idea of where we stand here, because this market really looks bearish to me. It's basically telling us that, you know, interest rates, one second, please. Interest rates want to go higher, not lower. And watch that level of 153.08 today. That's going to be a similar 382 retracement like we had over the last 3-day correction that we had back on the 19th of September. So that's a good one. Well, unfortunately, Cam, there are no 100% guaranteed trades. That's the beauty of this business, because if there was, there wouldn't be any business like this, because there'd be a line going around the New York Stock Exchange about 100 times for people to get in. But that line doesn't exist because this business is based on taking losses. And that's the real beauty of it, because you have to kiss a few frogs before you find a princess, boys and girls. You're going to have some bad trades along the way, but you're going to get some good ones. You know, it might be in the cattle market, it might be in the euro, it might be in the gold market, it might be something different than in the thing that you're trading. And if you're not trading something well, let's say you're not trading the S&P well, or you're not trading the Treasury bonds well, go look at something else. There's so many other things to trade that are fun to trade, that trade off these patterns, that it's really a lot of fun to do that. One of my favorites is, of course, is gold. But if you take a look at the crude oil market here, just look at this, the beautiful patterns that we have going on in crude oil. You'll see that we've completed some really nice ABCD patterns up in here. We're looking for a correction to come down to this, 150, around $50 a barrel. We're already down a little bit today from the high that we made on Friday, but that's what you're looking for, is watch these patterns in these other markets. And of course, you know, don't forget the foreign exchange, because foreign exchange is where you really see some fabulous moves that really light up the candle when you get them right. And we're having some big moves now in the U.S. dollar. It's starting to rally quite a bit. We're up near we're up near 94 right now. Get this up here so you folks can take a look at it. And that means the euro is coming into some support around the 117 to 116.50 should be some support in the euro. That's down 5 handles from the high. And that high, of course, was a big daily high on the euro because of the fact that it had so many numbers there that lined up at that 121 level. We'll post this up again to let you folks take a quick look at it so you can see it here. And there you'll see it. And now we're backing off. The actual really strong support comes in around 114.80. That's where those old highs come down to meet, and that would be a 382 retracement of the whole move for the year. So that's where I think it's going, but we'll probably have a lot of action in between, where we're looking at right now. We closed at 118.13. We broke about 80 pips last night, and we're starting to see a little bit of a, sideways action, from that level now, trading at about 117.50. So we'll be right back. Hopefully we'll have Arch Crawford on of Crawford Perspectives.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I think we have Arch Crawford on the line from Tucson, Arizona. Sam, are you there?
I am. Yes, I am.
Hey. I am, said Sam. Arch, I was watching the news last night from Las Vegas, and I was thinking about the 9/11. You and I were on the phone before the actual planes hit, and then right afterwards, of course. And what amazes me, Arch, is how the markets, they don't respond to news. Like how can people buy? Well, that's none of my business. But anyway, we've set through a whole bunch of these things before. We'll probably have to set through a few more if we live long enough. But it's always a tragedy. Let's get to the markets. That's what the folks like to hear here, because they don't want to pay any attention to some of the bad news that's out there, just like you and I don't. So I'm going to quit talking, Arch. I posted your first charts up here. So why don't you take the ball, okay?
Okay. Is the first one with the major indexes?
Yes, sir. That's what we've got.
Okay, well, there's nothing to see on the price chart except a steadily rising straight line. But my point of looking at it is looking at the MACD in the lower frame, and you'll see that the Dow Jones, that the NASDAQ NDX, that's the NASDAQ 100, I think, gave a MACD sell about 8 or 9 days ago, and the SPX, the S&P 500, gave one about 6 or 5 days ago, and the Dow Jones gave one 3 days ago. So they're all on a sell, but the MACDs are not. They're not the highest probability event, because sometimes it takes a couple of them, or sometimes even 3 of them before the sell kicks in. But I would say that that we are more likely to get one now, and in October generally, because of the seasonal pattern and some of the things that are happening with the advanced declines, although the new highs and new lows, I think we mentioned before a few times, are still not coming. The number of new highs on the New York Stock Exchange are not matching any bull market kind of effect, not at all.
We're having a question from one of our listeners about the volume in the market. Have you noticed any differences in the distribution in volume over these past, say, since the U.S. election?
Well, I've been noticing the long-term effect, which is that the public participation was, I think, at the maximum in 1999, 2000, and then in 2007 there was a lot of activity, and that topped us out and came down in 2008 and into 2009. But since then, the algorithms have taken over. So now I was looking them up for a letter a few months ago, and they reported in 2012 that 70% of the New York Stock Exchange volume was algorithms, and then in I'm sorry, it was earlier than that. And the next year or 2 years later, it was like 84 in 2012. And since 2012, the New York Stock Exchange has not been putting out the figure. I Googled it, and there was no information past 2012, except that the number of orders that were placed, the bid and asked, it was 94% algorithmic trading.
Wow.
So where have all the people gone, the traders gone?
Yeah, I guess they're all, looking at short-term moves, because, you certainly see some of that in the markets for sure. When we started doing this, 50 years ago, we were using ticker tapes and the old Reuters machine, but now, everybody has all this technical stuff that they can get on an Apple phone on the top of Mount Everest. So, I guess it's just truly changed quite a bit. I just, I read these articles about the algorithmic and stuff, but I just don't understand how there can be that many of them unless they're on both. They have to be on both sides of the markets, of course, but it must be all automatic, because there can't be any human interaction in some of this stuff because it's so short term, I would think. But, here again, I'm just guessing.
Right, and the trading patterns have been dramatically affected, and I'm not sure how much of it is algorithmic trading and how much of it is outright management by our government or the Federal Reserve. I was even said in the last letter, I said, why is it happening like this? Have Russia and China threatened to crash our markets, and that's what they're protecting against? Or, but I do know that both the Russians and the Chinese have determined that they're going to put out a gold-backed currency, and so have certain Arab groups promised that they were going to put out gold-backed currencies. So that would kind of trash our premium position in the world that we can print all the money we want and everybody else can't.
Arch, we've got a question about Bitcoin. Do you have any interest in that, or do you follow it at all?
In what?
Bitcoin.
I'm looking for the, let's see, what's it now in the 3,000s or 4,000s?
Oh, it's in the 4,000s. Last time I thought it had a high of 4,900, but I don't know where it's trading right now. I'm sure
I don't
one
know
of
how
our
far it's pulled back, but it did pull back, I think, into the high 3,000s, and probably have gone back up a little bit since then, but I have not followed it closely. But I'm looking for the maximum of wildness on the upside in things around early December. So I suspect it'll hit a new high before then, and it will be one of the wildest things we've ever seen, like 1999, during November and into December.
Well, I know that was the old .com bubble, and boy, we had some monster moves there, and about 70% of those things didn't exist 2 years later. So things do change in some of these markets for sure.
I think the NASDAQ went up like 50% in that last 6 months of '99 and into early 2000.
Yeah, it was the craziest thing I'd ever seen. Arch, we're going to have to take a break here in a minute, but we want to get back to one of the charts here on the first that you're looking at is that 30-year Treasury bond on the weekly. We're going to. Could you just start out? What's your feeling on bonds in here? Are we looking at higher rates or are we looking at lower rates? What do you think near term?
Well, I am suspicious that the Fed is not going to get their rates up the way they want to, that they're not going to be able to. But it's still a coin toss in this particular chart, in that it's right on the 50-week moving average, red line.
Okay.
And it's holding above.
We got to take a break here, Arch. Stay with us. We'll pay a few bills, and we'll be right back with Arch Crawford of Crawford Perspectives.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Arch Crawford of Crawford Perspectives. And Arch, we'll take a look at the gold market right now. What is your feeling here on the yellow metal?
The long-term chart does not show much happening in the rates, but looking at, I have the TNX chart there, which is a 10-year rate, and it just had a sharp rise up from a little above 2 to currently 2.32, which is right on the 200-day moving average. So I think that's going to be a heavy resistance point. And I said I was suspicious that the Fed would not be able to raise rates as much as they want to, as soon as they want to. But the December one, I think they'll do it, and I think it might begin making the market a little more seriously weaker.
What about the gold market here, Arch? What do you think here about gold?
The gold has broken up out of the long-term downtrend, which is a very, very strong positive, and got a little overbought and is pulling back. And the strong support is the 200-day and the 50-day moving, the 200-week and 50-week moving averages that are down around 1250 and a little below 1250. The strong support is from the lower trend line and the last low, both at about 1200. So I would be very surprised if it goes past 1200, and I think it will hold at the 1240.50 level. And then if it gets back above, if it hits 1380 or 90, the sky's the limit.
Well, I believe if it ever gets out of this 1400 range, it does have a chance to make some price levels that we haven't seen in our lifetime, but that remains to be seen. You mentioned something earlier when we were talking about the Fed and China about going to a gold-backed currency. You know, we've heard about this over the years many, many times, but it's always been rebuked. But I don't really have an opinion on it. Do you have a strong opinion about it?
Well, all I know is that Russia and China have been buying all the gold that India didn't buy for years.
Yeah, and India's still not buying gold, right? They basically put a law against that.
No, I think they eased up on that, and I think they're back buying, but not as much as before.
Okay, that makes good sense. Let's
but
take
Russia and China are just buying and buying and buying long term.
Okay, now if we take a look here at the crude oil market, we've just completed some, pretty good rally here going back, way back into early June. We've been rallying now for 3 months. Do you think this rally is going to continue in oil?
Well, actually, today it looks like it's down $1.37.
Yes, it's getting hit today for sure. Yes, it certainly is. Yes,
that's not quite down to the 200-day moving average, and the 50-day is a little below that and rising. So I would, if you look at the MACD though, it's almost to a sell, and we could have a dip back to the lower advancing trend line without too much trouble at 47 to 47.5. But I wouldn't. I'm not real positive on oil either. It would have to go above 55.24, 55.24. I think is a high tick back in January.
We had one of our mutual friends on, Bill Meridian, of course, about 2 weeks ago, and he was extremely negative to oil during the October-November period. And he gave us some statistics that, pointed to lower prices, and it certainly started that way beginning last week and then starting, so far today. But he's pretty good with oil because, he worked over in Abu Dhabi for, 10, 11 years, didn't he? Was he that long? Wow, I know when he started. Y'all will be here 2 years. He was there, I know, way over a decade for sure. Anyway, one of the things that we look at really closely here at TFNN is the foreign exchange markets, including the U.S. dollar. And you have an interesting chart here on the dollar index that I'd like to bring up for our folks to take a look at. And you want to tell us what you're looking at here on this dollar index?
Yeah, this is the daily, and it's had the biggest decline that we've seen in a few years, from up against 104 to down to 91. But it did break the previous low from May of last year, early May, at just about a hair under 92. It broke that, so it looked like it might continue, but I was saying that it's got strong support there from a rising, I think it's the 50-week moving average coming up, and it stopped right on it and has been bouncing. And so I like the action right now, the strongest action we've seen since that rally into May of, what was it? A rally into January 1st, I think it was. And so this is the best action we've seen. It hadn't been above the 50-day moving average since a little blip in April. So, as I say, this is the strongest action. If it may take some more pattern building in the area of 94 to 91, but it could be building a decent base for one more pop up before the end of the world.
Yeah, well, yeah, whenever that's coming in, that's for sure. Well, we'll probably be on the phone together when it happens. It seems like every time something like that happens, of course, we live close together, so that's probably the reason. But I don't want to go through another 9/11 again. That was too much emotionalism. That was tough. And I don't know, folks, you don't know this, but when that Pentagon was hit, Arch told me 15 minutes before CNN told us that the Pentagon had been hit. Do you remember that, Arch?
Yes. I don't remember where I heard it, though.
Yeah, but you called me and said the Pentagon's been hit, and I said, oh, it can't be because, I was looking at the Twin Towers, and you were spot on, and I don't know if they ever decided whether that was a missile or a plane that hit it. I don't think they've ever given us enough information about it because who knows what's going on.
The odd thing about that is that they went around and collected every tape, external tape that might have shown what it was, and they have never released a single one of them. So the conspiracy theory is that it was a missile, that there were not any parts of a plane, and it should have knocked the wings off on the outside, and they never saw any wings or anything.
Wow. Hey, listen, Arch, thanks for joining us, my friend, and we'll have you on again soon, okay?
Delighted, sir. Thank you.
You bet. You bet. That's Arch Crawford at Crawford Perspectives. You just go www.crawfordperspectives.com and you get a copy of his latest letter. 877-927-6648. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I have to tell you something of a human interest story, just to cheer your hearts up a little bit. Over the weekend, we always have a little poker tournament here in Tucson for Texas Hold'em. A bunch of the old guys, young guys all get together. There's about 100 of us, and we play on Saturday. And on the Saturdays when the football game came on, when the first football game came on, just as the tournament was starting, almost in unison, all of the players stood up and actually sung the national anthem. I mean, it wasn't a dry eye in the place. It was really quite cool. I let Shan Hannity know over at Fox, but I haven't heard back from him yet. But it was really a really nice show of unity. It wasn't sponsored by anybody. It was just like automatic. Just boom, 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 and it was really quite good. So anyway, we live in the greatest country in the world. Let's don't ever forget that. No matter these bad things are going to happen to good people, there's nothing you can do about that because of the crazy people in the world. You just got to live your life, and certainly don't live it in fear, because that's the thing that will destroy you more than anything else. So we'll keep an eye on that as we go. Remember, this is a very big week in China. It's when they've actually closed everything for the whole week. This is Harvest Moon week. We have our brightest moon will be coming in on on October the 5th. And speaking of brightest moons, we're going to have Norm Winsky as our guest on that brightest day of the year, which is always a good thing to see. We'll have a couple other guests this week that I'm working on, and we'll get them in also. Keep an eye here. We've got some markets that want to go lower, primarily the Treasury bonds and also the crude oil and also the gold. Those markets have very bearish characteristics. The patterns point to much, much lower prices. So if you see little rallies, try to get short if you can with a very, very small amount of risk, and I think you'll be pleased. Look for the little ABCD pattern. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.